is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at Westminster. Now, here's what's coming up on today's program. Political chaos. Liz Truss resigns after 44 days, the shortest premiership in British history. The race for number 10, Rishi Sunak and Penny Mordaunt lead the pack, but some MPs call for the return of former leader Boris Johnson. Plus, hawks batter markets while European stocks fall as U.S. yields spike and swaps price in a 5% peak in the Fed terminal rate. So, good morning, everyone. Quite a lot going on. So we're here at Westminster. The UK once again plunged into a fresh political crisis following the resignation of its shortest-serving prime minister. Now, here's what's happened after the lectern was placed outside number 10.
I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
Well, let's bring in Bloomberg's Alex Wickham. Alex, you know everyone at Westminster. I know you have sources on, across the aisle. Who's the next prime minister?
That is the question. At the moment, we see these spreadsheets of Tory MP nominations for each candidate. At the moment, Boris Johnson and Rishi Sunak are the two front runners. Heavy caveat there, though. We are pretty sure Rishi Sunak is going to run. We aren't sure yet that Boris Johnson is going to run. He is clearly canvassing support. He's trying to work out whether there is a path to victory for him and whether that is at all plausible. That's the key question, really, over the next 48 hours, over the weekend, really, before the nominations deadline ends on Monday. Then there's Penny Mordaunt is probably the third candidate who does have a realistic chance of getting to that 100, key 100 number that gets you on the ballot.
So, Alex, give me a sense, first of all, on Boris Johnson. He needs to get 100 MPs to vote for him. So do we find out tomorrow who's likely? I mean, what's happening right now? Do the candidates, and no one has put really themselves forward, but do they call MPs to try and muster support to look to see if they have the numbers before we have officially their names?
Yes, exactly. So actually, no candidate has declared yet and said, yes, I'm running for Prime Minister. No one wants to sort of jump the gun and be seen as, been plotting in the background over the last few days of Liz Truss. However, behind the scenes at Westminster, those are the conversations that are going on text message, on phone calls between people like Boris Johnson and Rishi Sunak, people around these candidates, their advisors, their MP supporters, ringing around MPs to try to work out whether they realistically can get to that magic 100 number. If they can't, they may not decide to stand. We've already seen a couple of the lower profile candidates, the likes of Grant Shapps, the new Home Secretary. He said that he won't be standing. He was definitely thinking about it. He was having conversations with MPs, and I think it was clear to him that 100 MPs was an unrealistic target for him, and so he's decided not to stand. That's the key question for these candidates right now, and this will all be taking place next 8 hours, 12 hours, 24, 48 hours, really, until Monday. It's going to be an absolutely extraordinary weekend of horse trading in Westminster.
Alex, I don't know whether we're extrapolating too much or whether the markets are just too optimistic, but the markets for the moment seem pretty encouraged by the process. Now, the process also seems to be putting the Conservative Party as pragmatists, right? We could have a prime minister as soon as Monday. What does this tell us about, whether this chancellor could also stay in place to make sure they deliver this autumn budget on October 31st?
I think you're right for markets. That is absolutely the key question. Is there going to be enough stability that allows Jeremy Hunt, the Chancellor's fiscal statement, to take place on October the 31st as planned? It depends who becomes Prime Minister, so there is a degree of uncertainty there. If perhaps Rishi Sunak became Prime Minister, it would probably be likely that he would reappoint Jeremy Hunt as Chancellor. There would be, the decisions essentially would already be made about what to do on October the 31st or close to being made. There wouldn't be a need to postpone that date, and the budget could go ahead as planned on October the 31st. If a different candidate, perhaps a candidate from the right wing of the party, potentially Boris Johnson or somebody else became Prime Minister, it is not 100% certain that Jeremy Hunt would remain as Chancellor. If a new Chancellor was appointed by the Prime Minister next week, it would be tough to see a turnaround in time for October the 31st. They would want to look at the books, they would want to look at the options, and we may see a delay then at that point of a few days to the October 31st statement.
And Alex, I know everything's to play at this point, but if you look at what the bookmakers see as the two front runners, so Penny Mordaunt and Rishi Sunak, could you describe them as potentially technocrats, that nothing much will change in terms of, growth patterns and keeping the markets on side?
I think any Prime Minister who takes over has to recognise the situation with the markets under Liz Truss. Nobody is going to take over, go back to Liz Truss day one and attempt some sort of radical right-wing libertarian approach to the economy that tanks the markets again. That is clearly not in anybody's interest to do that. So whoever takes over, I think the policies that they come up with and the statement that they make towards the end of October, beginning of November, whenever it is, should be along the same lines as what Jeremy Hunt was planning to announce. Certainly, if it's Hunt or Mordaunt, that there would be a large degree of stability there, and it would be a continuity of the Jeremy Hunt administration that we've seen in the dying days of Liz Truss. There is just that question mark of what happens if a right-wing candidate takes over. Do a few of those Hunt ideas get unpicked? However, it should broadly be towards the same direction of what Hunt was doing, because the reality is that anything deviates too much from that will spook the markets, and that's not in the interest of whoever takes over as Prime Minister.
No. Alex, thanks so much, as always, for all of your insights. Alex Wickham there. And, of course, Alex has a great readout every Friday that then goes over the weekend, so we'll push it out on social media, and I urge everyone to read that. Let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US is said to be discussing whether it should subject some of Elon Musk's ventures, including his Twitter takeover, to national security reviews. This comes as officials have grown uncomfortable over what they see as the billionaire's increasingly Russia-friendly stance. Separately, the Washington Post reports Musk is planning to slash Twitter's workforce by 75% in the coming months. Now, Adidas has issued a fresh profit warning as unsold goods piled up and consumer demand weakens across China and Western markets. The German sportswear maker says it now expects an operating margin of 4% this year, down from a prior forecast of 7%. CEO Kasper Rorsted has already announced he's stepping down next year. And Kering has posted slower sales growth than luxury rivals LVMH and Hermes during the third quarter. The Gucci brand, which accounts for more than half of Kering's revenue, was held back by China's continuing COVID restrictions. Its CFO told analysts the Italian brand's revenue from the mainland declined during the quarter, and the situation there is still not back to normal. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Later in the program, we'll look at the runners and riders in the race to follow Liz Truss as UK Prime Minister and whether Boris Johnson could really make a comeback. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Westminster in London. It's all about political turmoil. Investors focused on the UK, where the Conservative Party is desperate to draw a line under Liz Truss's disastrous premiership. Now we're joined by Christine Aquino, Bloomberg's markets editor. We're also joined by Bailey Wakefield, multi-asset portfolio manager at Aviva Investors. So thank you both for being with us today. Christine, when you look at the markets, they're pretty cool-headed about this election, and we should or could have a new prime minister by Monday. What's being priced in? Are they assuming that the current chancellor stays in his place?
I think that is the working assumption for investors at this moment, Francine, and thus why there is a sense of relative calm in markets despite the political turmoil that we've seen in the UK. And this is the norm usually, right? Markets tend to not really care so much about politics, one, because they're not very good at pricing political risk, but also two, it's not for some time until any sort of political upheaval will have real consequences for instance, the public or the country's state of finances, or what it means for the central bank, which is really the two things that investors really care about. And so, I think while we're kind of in this process, I would expect markets to kind of be in this sort of holding pattern, probably something that changes with regard to what happens at the Treasury, or if anything, the Bank of England, then that would be when markets will really start to pay attention and kind of reprice any new catalysts from here.
Bailey, if you were in charge of finances, if you were chancellor, what would you do to put this country back on the growth path? What are markets expecting and hoping for?
Sure. I think the main factor for the UK at the moment is that we're quite short on certainty. The only certainty that we have at the moment is that Liz Truss won't continue to be Prime Minister. The key question for markets is whether that normal policy making can resume. Breakdowns of what we would consider to be the normal policy making approach has led to that increased market volatility, and whatever would bring us back to that more conventional approach is something that markets would take comfort in.
Bailey, what comes for pound next? If you look at the 31st autumn statement, are we actually going to get it if we don't get a prime minister by Monday evening?
Sure. So for us, we currently prefer the US dollar to sterling. While in the near term, sterling might be supported as some of the Truss government risk premium is priced out, there are longer term structural challenges that remain in place. Sterling is currently being held up by policy tightening, and there's around 175 bips of tightening penciled in for the rest of this year, which we could well see. But then another 100 bips in Q1 might be a step too far if the economy is suffering. We know that there are a number of challenges for the UK economy, like rising borrowing costs and consumer confidence being near historic lows, whereas we know that the dollar is a safe haven currency that's being supported by a hawkish Fed rhetoric. So again, it's going back to that stability argument and making sure that investors have confidence.
And Christine, we heard from the former Chancellor of the Exchequer, Philip Hammond, he does not see how the Bank of England can continue with the timeline on QT because of proximity, of course, to the Bank of England decision, but because we are basically in leading or finding a new Conservative leader. Do you think they'll push that back? And how will markets interpret pushback of QT?
Well, Francine, yeah, I think at this stage it will be very difficult for the Bank of England to deliver an informed policy decision. Just considering the timeline that we're looking at, it is very, very tight for the bank to consider everything that has changed over the last couple of weeks here in the UK government. And so, yeah, I think the base expectation is starting to become that there may be a delay in this process, both in terms of potential policy decision on the November 3rd original date, and also what they're going to be doing with that QT program. I think that is, to some extent, what has buoyed bond markets over the past few weeks. And I think it will have to be a continued conversation and communication challenge for the bank to indicate to markets what their plan is going to be for this program. But I think at this point in time, investors are very much kind of pricing in a little bit of a delay here, which is why we're seeing quite the rally in UK bond markets, particularly in the long end.
All right, thank you both for joining us. Bailey Wakefield there, multi-asset portfolio manager at Aviva Investors, and our very own Christina Kino, Bloomberg's markets editor, joining us. Now, we'll have plenty more, of course, throughout the day, right here at Westminster. Coming up, one report suggests that Elon Musk plans to slash 75% of Twitter's workforce as part of his takeover. We'll bring you that story next, and this is Bloomberg.
Britain in crisis.
I am resigning as leader of the Conservative Party.
The shortest ever serving prime minister.
Trust Bloomberg for the fastest coverage and instant expert analysis.
Is a general election enough to begin to restore some of the credibility?
It takes a long, long time for the markets to forgive you.
You are now, from an economic point of view, tinkering.
Brexit has not gone away.
Wake-up call here for the Conservative Party.
For continuing coverage, keep it tuned to Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Westminster in London. Now, the Washington Post is reporting Elon Musk plans to cut nearly 75% of Twitter's workforce as part of his takeover. As talks progress, advisors are working to get the $44 billion deal closed by the end of the month. Shares in the social media app have taken a beating in pre-market trading this morning. So let's get a conversation going on Elon Musk. Joining us now is Bloomberg's Quick Take, Alex Webb. Alex, great to speak to you just now. So take us through the latest. 75% layoffs is a huge number.
Yes, the headcount is about 7,500, so the expectation is this would take it down to about 2,000. This is obviously being reported by the Washington Post, citing some documents that they've seen. It is a big number. There are concerns about what that might mean for content moderation, for the security of the platform when it comes to hacking and things like that. But weirdly, in Silicon Valley, it isn't necessarily considered that shocking by a lot of people. There is a sort of orthodoxy in parts of the Bay Area that Twitter has got too much headcount, that it is not efficiently run as a company, and 75% is maybe a lot more than people had expected, but there was the expectation they would come in and slash a lot of jobs.
So, Alex, will this be a first step to a hiring spree of new staff?
I mean, in a sense, it is kind of similar to that private equity approach of come in, slash, and rebuild. Perhaps then rebuild in a way that is more efficient and more effective. One thing you kind of have to say, if you look at Tesla, which at times is quite lean, it isn't actually run terribly efficiently. If you look at Tesla and you look at average revenue per employee, it actually lags quite a lot of its rivals. And so you do wonder whether Elon is the person who's able to build a more efficient, effective model, but presumably he then comes in and reallocates resources in a way he considers more effective.
So, Alex, how's the acquisition process actually looking at the moment? Will it go through? I mean, the deadline's next week.
So the bankers, our colleagues are reporting that bankers are accelerating this. They are confident they're going to get it closed by the end of the month. There is a bit of a fly in the ointment, namely regulators, that some of Elon Musk's tweets, which seem to not quite support Russia in the Ukraine, but propose Russia actually annexing parts of Ukraine, they have flagged the awareness of some US authorities and who are, according to our colleagues reporting, looking at some of Elon Musk's ventures. And there's a deep irony in the middle of this, that it looked at one stage as though essentially the government, or the courts at the very least, were going to force him to buy Twitter. There's a distinct possibility, albeit perhaps an outside one, that they might now say, actually, no, you can't buy Twitter for national security reasons. So that perhaps is the reason the stock is down quite a lot today. We just have to see how realistic a prospect that is.
Okay, Alex, thanks so much, as always. Alex Webb there from Bloomberg Quick Take. Now, we'll have plenty more, of course, on Musk and Twitter throughout the day. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The European Union has agreed to press ahead with a set of emergency actions to address the bloc's energy crisis. That's after Germany yielded to pressure from other member states to pave the way for a temporary price cap on natural gas. European Council President Charles Michel says it sends a clear signal to the market that the bloc is ready to act together. Now, the White House has accused Tehran of sending technicians to Crimea to support Russian attacks on Ukraine with Iranian-made drones. Meanwhile, Ukrainian President Volodymyr Zelensky says Russia must compensate his country for the destruction following Moscow's invasion. The St. Louis Fed says it will think differently in future about its officials participating in private events. That's after criticism of its president, James Bullard, for speaking last week at a private event hosted by Citigroup. Bullard's appearance could be seen as a violation of of Fed rules that aim to avoid providing advantage to any market participants. Sources say the US is looking into new export controls that would limit China's access to powerful emerging computing technologies. We're told the potential plans focus on the still experimental field of quantum computing and artificial intelligence software. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, a special look at the race for a new UK Prime Minister. We'll hear from Bloomberg's editor-in-chief, John Micklethwait. Also, we'll hear from the former leader of the Liberal Democrats, Vince Cable. That's coming up shortly, and this is Bloomberg. Good morning, everyone, and welcome to our special coverage on the UK race for a new UK Prime Minister. Well, I'm Francine Lacqua outside Westminster, where history has been made and another battle is underway for the keys to number 10 Downing Street. Now, Liz Truss says she was a fighter who wasn't going anywhere. But when the podium was rolled out in front of Downing Street on Thursday, it was all over.
Given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
Well, joining us now is Conservative MP Karl McCartney. He's, of course, a member of the influential 1922 committee, which oversees the election of new leaders in the party. He's also a supporter of former Prime Minister Boris Johnson. So thank you so much for joining us. First of all, given the rules that the committee laid out very clearly on the process of electing a new Conservative leader, is this pragmatism before ideology? Do you think, Mr. McCartney, that we'll have a Prime Minister by Monday evening?
That's a potential possibility. And first of all, thank you very much for having me on. But the 1922 committee changed the bar, if you like. They've raised the bar. So obviously the last leadership election, the nominations only need to be 20 for each candidate. This time it's 100 nominations are going to be needed to be one of the candidates. And that means just on the fact that there's only 360 odd Conservative members of Parliament, there can only be a maximum of 3 candidates come 2 o'clock on Monday afternoon. And we need to act swiftly. The country needs that. We need some stability and we need to move forward. And obviously, one of the reasons that I'm talking to you is because I'm also a backer of Boris Johnson, because I think he'd be the best person to unite the party and move forward. He has a mandate, obviously, 2019, won a general election with a huge majority. And there's still 2 years to go of that 5-year term.
But, Karl, so first of all, do you think he will definitely be one of those 2 people? Do you think Boris Johnson will be able to get those 100 votes, signatures from MPs?
I do. And by last night, after 9 hours, there was over 50 Conservative members of Parliament who pledged their support and were willing to be his nominees. But at this point in time, we don't even know if he's willing to stand. So he hasn't. Well, in fact, none of my colleagues have actually said that they're definitely going to be a candidate, obviously, because they're all busy taking soundings and finding out if they're going to be able to reach that 100 member threshold to make sure they get their nomination papers in well in time before 2 o'clock on Monday.
Yeah. But, given how Boris Johnson's premiership ended, why do you think this would bring stability? It was pretty chaotic. How is this an antidote to the chaos that we saw under Liz Truss?
Well, for the country and the Conservative Party, actually, the Labour Party and some of the media did their utmost for, 6, 7, 8, 9 months to castigate him, to throw as much muck as they could at him to try and make some stick, because ultimately he's the best electoral asset that the Conservative Party has. And for the past 3, 4 months, all I've ever had from my constituents in my marginal seat in Lincoln is that they want to see Boris back. And that's whether I'm visiting businesses and speaking to business people, whether that's constituents who I meet shopping in the various different supermarkets or even filling up my car. But not one person has come to me and said, we're really pleased that you got rid of Boris Johnson. So obviously, yes, Conservative voters in the main, I think, are one of the electorates. And obviously, when a general election comes along before December 24, I'd see that Boris Johnson being our Prime Minister, we've got the best chance of winning that general election. But actually, in the meantime, the parliamentary party's got to coalesce behind one person and be loyal to that Prime Minister as we move forward. We never expected to be in this place. But obviously, if there's a vote of the membership after Monday, then the Conservative Party members, I think, will back Boris, should he make the final two, to be the Prime Minister of our country.
But, Mr. McCartney, is this really putting party politics before everything? I mean, it's, pretty clear that the markets may have questions about the new chancellor if it's Boris Johnson, so he may give you a bit more power to win the next election. But what kind of markets, what kind of an economy will we be left with? It's not the stable one you were talking about 2 minutes ago.
Well, it is the stable one, actually. So, Boris Johnson has been in the position before. And should he decide to be nominated and to be a candidate, and should he, as I would hope, win that and become the Prime Minister, the markets know what he and others around him would be like. And I'm sure, he doesn't want to make any of those mistakes that were attributed to him, or the party might have, taken missteps in the past. And we'll ensure that, we need to ensure that very swiftly we have a Prime Minister in place who, yes, has the backing of the parliamentary party. And that's imperative, as we've seen, which is one of the reasons why what happened yesterday wasn't expected, 3 months ago or even 45, 46 days ago. And so, I'm sorry that Liz Truss and those around her and her family, etc. It was a very difficult decision for her. But we need to move forward, yes, on behalf of the country and our party, and certainly to ensure that the government continues with this small bump in the road navigated, and we move on swiftly on, and steady the buffs is a good phrase to say. And I think that the markets, when we certainly look at those financially, both in the UK and around the world, are well aware of Boris Johnson's time previously as the Prime Minister. And obviously, that's something that he was elected, as I say, back in 2019. There's another 2 years of this parliamentary period, of a 5-year period to take into account. Yes.
Do you think, I mean, given the timeline, which is we're expecting an autumn statement on the 31st of October to have more ideas fiscally of what this country will become. Then we have, of course, on the 3rd of November, the Bank of England, and the first starts his QT. If Boris Johnson is elected the next leader of the Conservative Party, should he keep this current chancellor?
Well, it's up to a Prime Minister. And at this point in time, as I said, Boris Johnson hasn't confirmed that he's standing. In fact, nobody else has.
Would you advise him to keep the current chancellor?
You can't tie the hands of any new Prime Minister. So whoever the new leader of our party is, who will de facto become the Prime Minister, that's up to them to decide whether they want to keep the current chancellor and their team that they're going to have around them. They're going to want to obviously make some changes, I would imagine, from the team that was around the previous Prime Minister, although she's still in post, Elizabeth Truss. But that's the way that politics works in our country. The Prime Minister gets to choose their team. And so, I'm not going to tie the hands of whoever is going to win out next week. But whoever the Prime Minister is, the Conservative Party needs to pledge their loyalty. The Parliamentary Party certainly need to remember that, divided we fall, but united we stand.
Thank you so much, Carl McCartney there, the UK Conservative MP for Lincoln. Now, let's continue our coverage, special coverage here from Westminster. We're also joined by Sir Vince Cable, the former leader of the Liberal Democrat Party and former Secretary of State for Business. Thank you, Sir Vince, for joining us. What would be your path forward for the UK on growth in the next 12 months?
Well, there isn't a great deal that the government can do to sort of trigger growth. I mean, that was the problem with the Truss mini budget, that somehow or other you can conjure growth out of thin air. You can't. The key requirement is going to be to maintain basic stability, political and economic stability. And I really worry about the next week or so, because, if Boris Johnson is a viable candidate, and he looks as if he is, he will seriously challenge Sunak, who is the front runner. And I think there are two consequences of that. One is that the Boris Johnson philosophy of cakeism, which you can always have your cake and eat it and not avoid difficult choices, is going to be back on the menu. And we're faced with the oncoming new budget announcement, which either will face a new Prime Minister, Boris Johnson, who doesn't believe in it, or whose supporters will cause a great deal of difficulty for Sunak, who is the most plausible candidate, should he win. So we're in for quite a difficult period of economic turbulence if the Tories insist on remaining in power and not going to the country so we can have a stable government after an election.
But, Sir Vince, I mean, we've seen, pretty chaotic markets. We've seen an economy, frankly, that was whipsawed in the last 3 months. We've seen, all the question marks regarding UK PLC in the last 12 months. If Boris Johnson were to become Prime Minister again, would he not have learned from any of that?
Well, I would worry about the consequences. So for several reasons. I mean, he's a very divisive figure in the country. And I would imagine within the Tory party, though I'm not a Conservative myself. I think we need to remember that only a few months ago, a majority of his parliamentary colleagues threw him out as unsuited to lead the country. My party had just won by-elections in wildly improbable places. I mean, Mr. Johnson is, has his qualities, he's a skilled politician. But a very divisive figure. I suspect he still faces misconduct allegations as well, in Parliament and possibly elsewhere. So that isn't going to solve our problems. Mr. Sunak is a better bet to impose some stability and build on Mr. Hunt's provisional outline of a budget. But he will have a lot of internal enemies who will make life difficult for him. If there's a big increase in taxation, which I think we all expect to be on the way, difficult cuts in public spending, but the anti-Sunak faction will snipe away.
So, Sir Vince, how do you think international investors that are watching us right now, what do they think about the UK and its investability longer term?
Well, I mean, clearly they have a very low view, but they've hedged their risks and we'll be waiting to see what happens next. But, we are going to go into a very difficult phase. There is no doubt about that. Whoever is the new Prime Minister and Chancellor will have to put through a very painful package that will create a lot of political resistance in the country and in the ruling party. It's going to be a very bumpy ride. I mean, I've been writing for some weeks about the fact that, the currency is likely to go below parity to the dollar, regardless of what happens to the dollar elsewhere. I think it's going to be very tough. So I think from a national point of view, we need to have a national election and hopefully vote in a government with a stable political base. But, British politics is such that that's difficult to make happen.
Yeah. Sir Vince, thanks so much for joining us. Sir Vince Cable, they're a former leader of the Liberal Democratic Party and former Secretary of State for Business, joining us this morning. Now, we'll have plenty more, of course, from Westminster throughout the day. Later in the show, we'll also look at the runners and riders in the race to follow Liz Truss as UK Prime Minister. A lot of talk now about Boris Johnson and whether he could really make a comeback. This is Bloomberg.
We've seen the power of the markets over the last few weeks. I think Chancellor Jeremy Hunt was getting on top of that, putting together a package that would have been reassuring to the markets on the 31st of October. Clearly, what we mustn't do now is anything which signals to the markets more chaos, instability and uncertainty.
Former UK Chancellor of the Exchequer, Philip Hammond, speaking to us a little bit earlier this morning here at Westminster. Now, the race, of course, for new UK Prime Minister is on. I'm Francine Lacqua with special coverage outside Westminster here in London. Now, let's speak to our editor-in-chief, John Micklethwait, who understands UK politics and, of course, knows a lot of the players also that could run. John, thank you so much for joining us. First of all, what I'm hearing today, which was largely discounted yesterday, was that Boris Johnson really has a chance. Could he be the next Prime Minister?
The answer is he could. I think when you complimented me by saying that I understand British politics, I don't think anybody understands British politics at the moment. I think everyone has been thrown completely by the events of the past few years, the past month and so, and the level of credibility that has ebbed away. But there is no doubt that Boris, if he can get over those 100 MPs, does stand a chance. And certainly if he gets anywhere close to the members, I think you see quite a lot of support for him still there. Amongst the MPs, it was quite interesting to hear, I think, Philip Hammond just talking about the need for stability, sensibleness. Those are not, stability has never been Boris Johnson's middle name. He has always been something of an anarchist, something of a provocateur. He's good at forming coalitions of people to get individual things done. If he was somehow sort of locked into something, then maybe it would be different. But I think at the moment, most Tory MPs, I was in Westminster the other night, they are sceptical about that.
Yeah. But, John, so it was my understanding through the rules that the 1922 committee laid out yesterday that actually the Tories just wanted to be pragmatic, wanted some kind of stability and maybe signal to the markets that really they mean business to, draw a line under the sound of the last 44 days. If there is a chance that Boris Johnson becomes prime minister, is then the calculation that they just want to have a shot at the next election?
Yes. I mean, the argument for Boris, he has one quite good argument, is at the moment the Labour Party is jumping up and down and saying, look, we need another election. Nobody has given anybody a mandate. Well, the truth is that Boris, whatever his pluses or minuses, did win a massive election victory just a couple of years ago. So he does have a clearer mandate in that way than anybody else. The problem is all the words you've used. I mean, you mentioned pragmatism, stability. These are not things that one immediately associates with Boris Johnson. And if you take on top of it, the problems he has with the Privileges Committee, that he could quite likely, possibly, be actually expelled. Not quite likely. There's a possibility that he could be expelled, have to fight a by-election because of breaking the rules about not telling the truth to Parliament. So he does come with a lot of baggage. On the whole, my guess is that the Tories will try and fix it. If they've got any ounce of their several centuries worth of cunning left, they will try and fix it so that there is somebody who emerges, probably either Sunak or Mordaunt, in a way that they can all unite around them. There is talk this morning of a Sunak-Johnson sort of talks going on quietly in the background.
So, John, if you're a market participant right now, you probably want three questions answered, which is, do we go ahead with those fiscal plans on the 31st of October? Does the Bank of England continue with its plans for QT on November 1st? And then what happens with interest rates on November 3rd? If we have a Penny Mordaunt or a Rishi Sunak as Prime Minister, do you assume that those will be easier questions to answer because it'll be more of a technocratic kind of government?
I think you could probably do that. The only thing which is another very, very small argument in favour of Boris is if ever there was a time when he would be caged by economics, this is it. And so that could be at least a little bit of what's going on in the background with Sunak and Boris. The interesting thing about the UK at the moment, it doesn't really matter. You just had Vince Cable on from the Liberals. You could have Keir Starmer on from Labour. You could have Jeremy Hunt. At the moment, there is very little room for manoeuvre. There's like a narrow tram line, and whichever party is in government is going to have to go down that one because so much credibility has been lost. So on the whole, if you're on the left, you might try and spend slightly more money to do more for social equality. If you're on the right, you might try and cut a few taxes here or there, but there is not a lot of room. And in a strange way, it's much more similar to those kind of elections, again, a country you and I occasionally talk about, Italy or Southern Europe during the Euro crisis, where there really wasn't very much room for manoeuvre. Britain has lost so much credibility so quickly that even the kind of tax cut, or even the giveaways that Truss did to begin with, or that were promised before, that didn't entirely spook the market, are now seen as unacceptable. So there is a very, very narrow room for manoeuvre at the moment. So to that extent, yes, Boris, but probably more Mordaunt or Sunak would have to stick very solidly to that technocratic idea.
So, John, the way elections work in the UK, it's, of course, the Tory party that has to call for them because otherwise they stay in power for the next 2 years. Philip Hammond rightly reminded me that turkeys don't usually vote for Christmas. But what's the path to possible, general elections earlier than in 2 years?
The answer is turkeys don't normally vote for Christmas, and so that the odds are very heavily on the Tories not doing that. The vast, again, going around Westminster, most of them are in a state of shock that people with very safe seats are now in danger of losing it. If you have a 30% change, so from their point of view, merely if the Tories got back to losing by 5 points or 10 points, and you ended up with a Starmer government, most Tory MPs currently there would still keep their seats, others would not. The problem in this particular thing, and this is where the ancestral problem of Brexit comes on, is that you have got some fairly, I can put it this way, deranged turkeys wandering around the farmyard, and they are sufficiently kind of stoked up, mainly on the kind of Brexit, the sort of hardline Brexit side, a few on the others. You can already see people saying they won't support Johnson. There might just be enough of those, depending on who wins, to join Labour in a vote of no confidence, because to be fair to the way the British Constitution works, and it's probably at this time worth ironically reminding ourselves that people used to come to this country to examine the Constitution and learn from it. This isn't really a kind of constitutional problem, what's going on at the moment. It's a massive political problem inside one party to do with competence and so on and so on. But at this precise moment, it's a very simple thing. The MPs elect the Prime Minister if those MPs don't want that particular government, and enough of them move on the Conservative side to say that whoever's been chosen is unacceptable, and they join Labour in a vote of no confidence, then that person is out. But that is so yes, Philip Hammond's absolutely right. Turkeys don't normally vote for Christmas. In this case, I think we've seen enough evidence that the turkeys are not entirely thinking about their well-being.
John, thank you so much. Our Bloomberg editor-in-chief, John Micklethwait. Now, let's get straight to a pollster. They are very good, especially in times of crises like these where we don't exactly know what's going on. So let's discuss the polling figures with Gideon Skinner. He's head of political research at Ipsos. Gideon, thank you so much for joining us. First of all, what are the polls right now? Does Boris Johnson really have a shot?
So if we look at the data, Boris Johnson's ratings are, amongst the general public as a whole, they're a bit behind where Rishi Sunak is. He's more popular amongst the Conservatives' own base, so they're 2019 voters. But frankly, as was just been talking about, neither of the contenders at the moment really look like they're a magic wand for the Conservatives, given the underlying troubles that they're facing.
This may be a stupid question because I know the bookmakers actually have bets on, how MPs will vote. You don't have any surveys on that, do you? That'd be quite useful.
We're waiting for them to declare.
Who do you think? The calculation, right, is that Boris Johnson could win something for the Tories in the next 2 years. But what happens in the next 24 hours?
Well, I think what's going to be happening is clearly all the candidates and the MPs are going to be trying to garner support. They're going to be trying to lay out their case. If you look at what the polls are saying, as I said, Rishi Sunak gets better scores generally amongst the public as a whole. Boris Johnson will be pointing to his better scores amongst the base, but you have to remember when Boris Johnson left office over the summer, his own personal ratings weren't particularly good either. They've been falling. Yes, yeah. So we were seeing 7 in 10 were pessimistic about the economy. We saw Keir Starmer had taken the lead as most capable Prime Minister, which was the first time a Labour leader had done that for a long time. So there were still lots of criticisms of Boris Johnson, and he gets higher negative ratings as well as his positive ratings.
It's quite amazing, actually, that we've just gone back to speak about Boris Johnson, non-stop since 6 a.m. this morning. Gideon, talk to me a little bit about, if there's a general election tomorrow, is Labour still 36 points ahead?
Well, in our most recent poll, we had them 21 points ahead, but that was still the biggest lead that we'd seen for 20 years. So, you're getting a range of leads in the polls. But really, the underlying point is that Labour have got a very clear lead, which at the moment would suggest they would get an easy majority. But, of course, we're not in an election period right now.
And then, you know, who knows what we'll see over the winter months because of the energy crisis, because of the cost of living crisis. So are you expecting polls to, you know, change quite dramatically depending on who the next prime minister is and how they handle only the economy?
So politics has been very volatile over the last years, months. So it wouldn't be surprising to see more changes. But, I mean, yes, it's still the fundamental issues facing the Conservative Party in particular are that the biggest issues for the public are the cost of living and the economy. You know, this is a level of concern we haven't seen about inflation for 40 years in Ipsos's polling. So it's a big new concern for the public. And people are doubting the Conservatives' long-term economic plans. They're losing confidence in it. And Labour have got the first lead on it for 15 years. So that's where the Conservatives need to regain their credibility.
Gideon, thanks so much. Gideon Skinner, their head of political research at Ipsos, joining us about, well, the popularity and probability of who the next prime minister is. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, Anna Edwards here at Westminster. This is Bloomberg.
I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
She was a good partner on Russia and Ukraine, and the British are going to solve their problems, but she was a good partner.
We fixed a high threshold, but a threshold that should be achievable by any serious candidate who has a realistic prospect of going through.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 5 a.m. in New York, 10 a.m. in London, and 5 p.m. in Hong Kong. Our top stories today. Political chaos continues. The UK could have a new prime minister as soon as Monday after Liz Truss's resignation gave her the shortest premiership in British history. Unity on energy. Germany agrees to join other EU countries in exploring a gas price as the continent's leaders tackle the looming crisis in Brussels. And stocks retreat amid high bond yields. In fact, the highest since 2007. The 10-year Treasury yield holds at its highest level since the financial crisis. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards is with us at Westminster right now. Anna, and you are following the increasingly interesting race to become the next prime minister, Boris Johnson, with legitimate prospects.
Yeah, absolutely. Key questions right now. Who makes the list? Who has enough support from members of the Conservative Party to make it onto the list to be considered as Prime Minister? We could get a Prime Minister, of course, announced by as early as Monday. So that's the time horizon to be watching. And when do we get certainty for financial markets around the fiscal plans? That's what many in the markets are going to be watching for then, Matt.
All right, we're going to continue to cover this story all day and probably deep into next week as well. Let's take a look first, though, at what's going on in U.S. markets. Futures coming down. It has been a pretty good week. In terms of the cash trade, we're up 2 1/3% this week after some big gains on Monday and Tuesday. We were down on Wednesday and Thursday, and it looks like we could have a down day today, although there's still 4.5 hours left to go. One of the biggest headwinds, of course, is those high yields. They've been rising up, and today we hit, I think, 428 on the 10-year was the high we hit today, the highest since the great financial crisis kicked off in 2007 before rates started to get slashed. The Bloomberg Dollar Index also closer to an all-time high. It hit 1353 back in September. Right now we're at 1352.07. So this increasing strength, and you're going to see a number of other currencies that are down big against the dollar today, is not great for risk assets. NYMEX crude coming off 1.25%, maybe the one point of brightness out there for U.S. markets, for U.S. equity markets right now, is that NYMEX crude trades down at 83.46 a barrel. Kailey, what are you seeing in Asia?
Well, obviously, as we were are seeing yields moving higher. It has led to a deterioration in risk appetite overall, as you were pointing out with U.S. futures, Matt. And you definitely saw that in Asia as well. The MSCI Asia Pacific Index down about 1.2% overnight. Part of that has to do with risk appetite broadly, but there is also concern around COVID-0 policy with lockdowns in part of Xi'an in China. Plus, you have news overnight reports from Bloomberg that the U.S. is looking to expand new curbs on Chinese access to equipment, including computing technology, so even broadening those out. That weighed on chip stocks in particular, one of them, Piotech, which was down about 4.5% in the Asian session. Now, as you talked about, Matt, Treasury yields moving higher. That was definitely evident with yields moving higher in the Asia Pacific as well, up 14 basis points on the Australian 10-year to just shy of 4.2%. So we're back up near the highest levels since 2014. But we are at the weakest levels since the summer of 1990 on the Japanese yen, and it is still weakening. Right now, dollar yen at 150.94. We are looking on the cusp of a 151 handle, Anna, and that means we are on intervention watch again today.
Absolutely. So that's the FX story dominating through the Asia session. The FX story here in Europe, very focused on the pound and potential weakness in the pound, some of that coming through already. This is the picture we have for European equity markets then under some pressure. It is a bit of nervousness around UK politics, but really it's also the global dynamic around rising Treasury yields, around rising yields broadly and how that weighs on risk appetite. Profitability also being challenged in a number of areas. We'll come to some consumer goods companies with that focus a little bit later on in this conversation. Let's get to some other UK assets or broader European assets. Here's the UK for you, 111.40 on the pound. We've got the euro also gaining against the pound. So yes, there's dollar strength, but there really is pound weakness coming through today. And we've got some movement on gilt yields, of course. The nervousness really here is around the 31st of October. That fiscal statement was when UK financial markets thought they'd get some clarity on fiscal plans. And if we don't know who the Prime Minister is, and then by definition we're not entirely sure if we'll see a change of chancellor again, that throws big questions around that, and so leads to some uncertainty around UK assets, perhaps. We've also got in here the European natural gas price, the benchmark there, down by 6.7%. Germany stepping back from its prior opposition to a gas price cap. That weighing on the price of gas today, and it seems as if they're trying to rework that benchmark anyway. So perhaps some good news as we look into the winter if those gas prices do continue to fall. So here in Westminster, the UK has been plunged into a fresh political crisis following the resignation of its shortest-serving Prime Minister. Liz Truss's chaotic 40-day tenure saw her announce a massive package of tax cuts before unwinding most of it in the face of a market rout. Here's what happened after the lectern was placed outside number 10.
I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
So after 44 days, she resigns. Jo Mays, our colleague, our UK government reporter, joins me now here in Westminster to take us through some of the latest and some of the analysis. Jo, give us the latest then, where we've got to on who's likely to be on the list of contenders.
So we're looking at three big names: former Chancellor Rishi Sunak, the Leader of the House of Commons, Penny Mordaunt, and also former Prime Minister Boris Johnson. He's got momentum this morning as more and more of his backers want him to come back. But the key number is 100. Can you get 100 nominations from MPs to get onto that ballot? And then it would go to Monday, where we have these votes of MPs. There'll be 2 votes we expect, and that second vote, when there's just 2 candidates left, will be an indicative vote. And the hope in the party is that whoever is the runner-up in that vote will step down, such that we get the new Prime Minister on Monday.
So the hope is that we don't have to get this out, don't have to push this out to the party membership like last time, that this can be decided by members of Parliament. Kailey?
Well, depending on who it ultimately is, Jo, do we have a sense of what their priorities will be or what they can possibly accomplish given the difficulty that Liz Truss had with setting her agenda?
Well, the big focus is on what economic approach they would take. And I think the expectation is that whoever becomes Prime Minister, whether that's Rishi Sunak, Penny Mordaunt, or indeed Boris Johnson, they would likely keep Jeremy Hunt in place as Chancellor at least until October 31st, when we expect that fiscal statement. But as Anna was just saying, there is some doubt around that date now because the new Prime Minister might want to change things up, might want to change their priorities. But the UK has been through such a trauma with financial markets recently. I don't think they'd want to tip the cart over again and do something that would destabilise things. So I think Hunt stays, at least in the short term. But then in terms of, it's all about stabilization. It's all about trying to get those yields down again, improve the position of the pound. And that's why I think we'll see a cautious approach from whoever becomes Prime Minister in the next few days.
All right, Joe, thanks very much. Bloomberg's Joe Mays covering the political story for us from Westminster. Let's turn now back to the continent. Of course, the UK has left the European Union, but the intense levels of political uncertainty in Great Britain are also impacting the EU and regional stability there. French President Emmanuel Macron spoke to our European correspondent Marija Veitmane yesterday.
France, as a nation and friend of the British people, above all wants stability, especially in the current context. In a context of war, of energy crisis, it is important that the United Kingdom regains political stability very quickly.
Marija joins us now from Brussels. So, Marija, how do European leaders view this turmoil in the UK?
Well, Matt, I have to be honest, and this morning, very little reaction. European leaders are 100% focused today on the energy crisis, the war in Ukraine, and the difficult winter they have ahead. And in fact, that reminds me of a conversation I had yesterday with a European diplomat who told me essentially this lost in translation between the UK and the EU comes down to that. In the United Kingdom, this is still a Brexit-dominated single-story political system. When you look at the European Union, the priorities have shifted, but I did have to do my job after all. Well, I have to shout questions to our politicians, and then I asked that question to the French president. Are you sad? Will you miss her? What's your reaction? Well, you played it in that clip. We want to see stability in the UK. This is a challenging context for Europe in general with the war in Ukraine. And he also told me, quote, I'm sad the way I would be sad with any other colleague that leaves. Not a lot of emotion, but the reality is, Matt, how could he? He saw her once in person. A lot of European leaders got no FaceTime with her, and she did not even make her big Brussels debut. So can you really be sad when you don't know a person? I mean, that's a question I put to you.
Right, okay, yeah, in 44 days, a limit to the number of people you can meet, I suppose. More importantly, where you are, Marija, there has been agreement on on energy, on capping gas prices, including, crucially, from Germany.
Yes, and Anna, let's break it down here because this meeting yesterday was important. In fact, there was a deal accomplished at 2:45 a.m. in the morning. Now, the question I get from a lot of traders, by the way, reaching out on our systems, suggesting, but what is it that's new? What was agreed yesterday? I don't get it. The thing to clarify is that yesterday was not a technical meeting on a specific level of price cap, on a percentage. This was a political discussion, whether or not the EU 27 could even agree to the word cap. Remember, the Germans were adamant they did not want to see it because it could potentially scare up supply. Now, there is a deal on the language. They agree that the proposals put forward by the Commission, including that dynamic price cap, including the joint purchases, including joint storage, should go ahead and now give themselves 2 to 3 weeks to work out the legal and the pending details around this package.
All right, Bloomberg's Marija Veitmane doing her job, shouting questions and reporting for us from Brussels. Thank you so much. Let's turn now to the market impact after a month of economic chaos under Liz Truss's tenure. It will be up to the next prime minister to restore calm and make policy decisions that bring back stability to the markets. Bloomberg's Danny Berger joins us now with a closer look at the recent action. And you're definitely not seeing stability today, Danny. Gilt yields are up, and I would note it's not just the UK. The German 10-year Bund yield just passed 2.5% for the first time since 2011.
Yeah, and BTPs are selling off this morning, and treasuries in the U.S. are selling off. So, yes, it is an ugly day for bonds in general, and it has been remarkable to see the impact the bond vigilantes have had. Now, to be fair, the sell-off is pretty steep in the U.K., about 12 basis points higher for both front end and longer out on the curve. And it's not just bonds. We're also seeing currencies sell off, specifically sterling. That's down 0.7% versus the dollar. And it's not dollar strength. It's also selling off versus the euro as well. Now, we did see yesterday when Liz Truss announced her resignation, assets did move higher. So this isn't necessarily a story of negativity surrounding Liz Truss leaving. It might be more in line with the Times, for example, reporting that we might get a delay to the October 31st fiscal agenda. That throws into question what happens with the BOE. QE, obviously problematic for markets and not stability. I thought that SocGen framed this very well. They wrote in a note late yesterday, the recent U-turn on the mini budget and resignation of Liz Truss should help the UK dodge a downgrade by S&P or Moody's. So that's the positive. But the negative, they write, is that it's unlikely to mean an upgrade, unlikely to revise back to stable. They could argue that the credibility of the government and stability have been weakened since the recent turmoil. And we see that continue to show up in the data. The most recent borrowing figures we got from the UK yet again showed that the UK had to borrow more than expected, which for those who are watching us on TV, I have that chart in front of me. But Matt, it just goes to show that regardless of who's PM, we have higher rates, we have more expensive costs, more expensive energy. The fundamental picture is one of bearishness for the UK.
Yeah, very difficult no matter who comes into the office. Danny, thanks very much. Bloomberg's Danny Berger giving us the market look at what's going on in the UK. Let's turn now back to markets in terms of equities, I should say. Twitter is falling as much as 13% in pre-market trading as the Biden administration and officials there are said to be discussing whether or not they should review some of Elon Musk's deals. For more, Alex Webb of Bloomberg Opinion joins us. Alex, so a lot going on. They also reportedly, Elon, I should say, looking to completely gut the company.
Well, yeah, there's a report in the Washington Post that they could cut as much as 75% of headcount, given it's about 7,500 employees. That would take it down to 2,000. Concerns that would particularly affect things like content moderation and some of the security that the platform has, make it more vulnerable to hacks. That's one piece which, frankly, isn't necessarily current shareholders concerned, unless they have, of course, concerns to society, the impact on society. The thing that is a greater concern for investors is the report from our colleagues that the Biden administration is looking at some of Elon Musk's assets that seems to be prompted by some of his tweets that didn't quite express support for Russia, but mooted perhaps the idea that Russia should be able to annex some parts of Crimea in order to bring an end to the war, as well as his comments about not being able to continue to provide Starlink, his satellite communications service, to Ukrainians free of charge. So that, according to our reporting, has prompted some considerations from the administration.
Always drama with this one. Bloomberg's Alex Webb, thank you so much. Now let's continue the conversation on social media and take a look at some of the other stocks on the move in pre-market trading here in the U.S. And really it all emanates from Snap, which reported after the bell yesterday. Wasn't very pretty. They reported their slowest revenue growth on record, blaming a continued slowdown in advertising spending as we see a softening in the economic environment. And as a result, Snap shares are down 26%, and they're taking other advertising-reliant companies down with them. Pinterest down 7.3%. Meta, which of course is the parent of Facebook, down nearly 4%. And then Alphabet, the parent of Google, down about 1.7%. Collectively, we could see tens of billions of dollars wiped off of the market cap of these companies today, Matt.
All right, let's take a look also at some of the movers that we have here in Europe. Adidas has a number of unsold sneakers, and it's cutting its forecast for the full year. The stock, as a result, is down 9%. This is, I think, the first red flag I saw this morning in terms of the consumer, because remember, we had Hermes doing so well. LVMH also has been doing so well. Kering, on the other hand, is not doing so well. And the problem with Kering isn't one that's new this quarter. It's a problem with Gucci. That's been an issue now for 3 reporting periods in a row. They just can't keep up with their rivals in the luxury sector. So Kering down as well, 4.2%. And then reports that Deutsche Bank reports on the Bloomberg that Deutsche Bank is going to have to cut staff in the investment bank to get ready for the downturn. As a result, the German stock is down 1.8%. Anna?
Coming up on the program then, Matt, we will think about where the earnings story has got to. You set out there some of the concerns around it. Marija Veitmane joins us, State Street senior multi-asset strategist. We'll also ask about UK assets as we continue to track UK politics. And on that front, we'll talk to Margaret Beckett, veteran Labour MP and former UK Foreign Secretary. We'll get her perspective on what's happening in UK politics right now and where it twists and turns to next. Plus, we'll talk to Isabel Skimama, who is CEO of AXA IM Alternatives. Real estate could be part of that conversation. Stay tuned. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards with us out of London on Abingdon Green this morning, of course. Let's get to Marija Veitmane, our next guest, and I want to bring her in with some points that were made in terms of what the problems are facing equities right now. Marija comes to us from State Street, and Marija, Goldman Sachs strategist Kristen Mueller-Glissman said there are three major risks heading into this earnings season. Sales headwinds from a stronger dollar. We see real dollar strength today. The impact of on margins of a weaker consumer, concerns there carrying an Adidas highlight, and of course input cost pressures from inflation, plus taxes due to President Biden's Inflation Reduction Act. Are you as well concerned about these issues for earnings this season?
I mean, for me, the key issue absolutely is margins impact. And what is interesting is maybe not that much current margin impact, but future margin impact. Because what we're seeing is that current earnings have actually been a lot better than lots of people feared. We still hear from companies about underlying strengths and consumer spending. There's still some saving. Labor market is still strong. So current earnings is a lot better than lots of people feared. The big concern is what happens next. And we know what's happened next. Economy is going to slow, and it would be so much more difficult to defend margins. So margins is number one priority for me.
So you say, Marija, that things are basically going to sour going forward. And yet, if you take a look at earnings expectations looking forward, we have started to see them come down. You can see that on the Bloomberg terminal. GTV Go is where you'll find our whole chart library, but they have not rolled over to the extent we have seen equities rolling over. There is a very big mismatch between those two lines. When do you start seeing those material downgrades, and do they just catch up to the equity market, or do equities further deteriorate along with those?
I mean, for us, the big decline in margin in equities this year have been multiple compression. So as I said, underlying earnings have been okay, and even now, I mean, I think it's probably fourth earnings reporting season in a row that analysts or market is really surprised of kind of underlying earnings strength. So earnings stories are still okayish. I mean, not fantastic. Of course, we're seeing kind of slowdowns here and there, but okay. What we see in equities is multiple compression, and that's your macroeconomic headwinds. That's your Fed absolute focus on fighting inflation and doing whatever they need to slow aggregate demand. So that's what equities responded so far. But underlying earnings, I mean, they've been robust so far, but there is no question that monetary policy works with longer lags than before, but works still. So we will see earnings contraction. So that's all that's coming, and that's all that makes me even more worried about equity outlook going forward.
Okay, so that concerns you about equities into the future. Marija, are you also thinking about the tax take that we're likely to see Western governments exert on their companies as a result of trying to fix fiscal black holes? Of course, this comes to mind because I'm here in the UK, and there's a lot of thought about whether energy companies will be more widely taxed or banks perhaps more widely taxed, but this could be something we see elsewhere as well.
Oh, absolutely. I mean, I think it's unfortunately, it's very often happens when the kind of overall pie gets smaller, overall economy is struggling. Governments do need to find ways of financing. And so they either increase taxes, and that's bad for the kind of overall economy and corporate growth, or they cut taxes, but then both vigilantes come in and smack government. So it's very difficult balance for the governments to find. And I mean, you kind of between rock and a hard place. Whatever you do, there is no great outcome. So it is a very challenging environment. And no, I would not be surprised that we'll see kind of attempts to increase taxes here and there. I mean, energy seems to be prime candidate, unfortunately.
Marija, you're a senior multi-asset strategist at State Street. Looking across asset classes in this kind of everything slump, what's your favorite? I mean, do you like bonds here? Have we peaked in rates? Do you like private investments, private credit, or private markets? Is there some place that investors can hide?
Yeah, that's actually a very good question, Matt. I mean, we recently wrote our asset allocation, tactical asset allocation document, and it actually the model came out neutral, but not because we like anything. It was bad for stocks, bad for bonds, hide in cash. And hide in cash is very much a dollar trade. So we continue, I mean, dollar is obviously super strong, super crowded, super overvalued, but it's a reserve currency, it's a safe currency, and markets and investors are going there, and that's appreciating, and we expect to continue dollar strength.
All right, Marija Veitmane of State Street, thank you so much, as always, for joining us with your market insights. Now let's keep you up to date with other news from around the world with the first word. Sources say the U.S. is looking into new export controls that would limit China's access to powerful emerging computing technologies. We're told the potential plans focus on the still experimental field of quantum computing and artificial intelligence software. The White House has accused Tehran of sending technicians to Crimea to support Russian attacks on Ukraine with Iranian-made drones. Meanwhile, Ukrainian President Volodymyr Zelensky says Russia must compensate his country for the destruction that has been wrought by Moscow's invasion. And the St. Louis Fed says it will think differently in the future about its officials participating in private events. That's after criticism of its president, Jim Bullard, for speaking last week at a private event hosted by Citigroup. Bullard's appearance could be seen as a violation of Fed rules that aim to avoid providing advantage to any market participants. Coming up, we'll continue the conversation not just on the Fed, but monetary and fiscal policy broadly, as there continues to be political upheaval in the UK. We'll have more from Westminster, where Anna Edwards, of course, is, with Matt Miller and myself, Kailey Leinz, in New York. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Political chaos once again. The UK could have a new Prime Minister as soon as Monday, after Liz Truss's resignation gave her the shortest premiership in British history. Unity on energy. Germany agrees to join other EU countries in exploring a gas price cap as the continent's leaders tackle the looming crisis in Brussels. And stocks retreat amid higher bond yields. The 10-year Treasury yield holds at the highest level since the financial crisis. Welcome back to the programme. I'm Anna Edwards in Westminster, covering the UK politics once again with Matt Miller and Kailey Leinz, of course, in New York. And Matt, the economic story, very focused on, of course, rising yields environment, and that is, to a large extent, a global narrative. We've seen that very much a preoccupation of markets overnight with what's been happening with US Treasuries, but also with European expression around gilts and bunds.
Yeah, we're definitely seeing yields rise around the globe. That's no good for stocks anywhere, and as a result, we see futures down here in the U.S. Right now, down just about 0.5%, and it would be the third negative day in a row. Nonetheless, it's been a pretty positive week so far. We are up 2.3% in terms of the cash trade because of the gains that we saw on Monday and Tuesday. We went all the way up to 37.20. Right now, we're trading back down under 3,700, and it looks like we could lose some more ground. The 10-year yield, you can see right now at 426.74. We've gone well over that, above 428 today, and that is the highest we've seen on the 10-year Treasury since 2007. So since the great financial crisis was really just kicking off, we also see incredible strength in the dollar. Marija Veitmane was just commenting on this, but the all-time high on the Bloomberg Dollar Index is 1353. That was at the end of September. Right now we're at 1352.18. So getting back to an all-time high, and that's a big headwind for equities, for risk assets. A tailwind is cheaper crude. Right now we are seeing NYMEX come down, but only about 2/3%. So WTI trading at $83.96 a barrel. Kailey, what are you seeing in terms of the pre-market movers?
Well, there is a lot of action in the pre-market this morning, and a lot of it centers around social media companies. Some of it more idiosyncratic, which would be Twitter, because the saga continues. We had a couple reports out overnight, one from the Washington Post that Elon Musk would plan to cut as much as 75% of Twitter's workforce if he does indeed succeed in taking over the company. And I say if because there also is a Bloomberg report out overnight that the U.S. and Biden administration officials are looking at whether or not they need to subject any of Elon Musk's ventures to national security review. So could that mean that he actually can't buy Twitter at all? That may be one of the reasons why the stock is down about 9.3%. But there's other broader macro factors to consider in the social media and advertising reliant space, evidenced by Snap overnight, which reported its slowest revenue growth on record, blaming an advertising slowdown in a softening macroeconomic environment. So as a result, Snap is down more than 25% before the bell, and it's taking peers like Pinterest and Meta down with it. Pinterest down about 7.3%, Meta down 3.8%, tens of billions of dollars likely wiped off the market cap of these companies today, Anna.
Yeah, really big moves there. Fascinating story around Twitter, around possible scrutiny, but also around the size of the business itself. Let's have a quick look at what's happening on European assets then. The European equity story is negative. The stock 600 down by 1.6%. We've got the pound at 111.25, down by just shy of 1%, to focus on gilts as well. But of course, there is the global sell-off in bonds that we're seeing and a higher yield story across various geographies. But there is this UK angle to it, of course, around the tensions and the uncertainties in politics. We don't know who the Prime Minister will be come Monday. We might have a Prime Minister, though, by Monday, if not then Friday. And then we don't know what happens with the 31st of October fiscal statement. That's going to be for the markets a key focus. Who is Chancellor? Who is at number 11? Downing Street. So that's the picture on the UK assets. We've also got the natural gas price in here just to once again reflect on how far we've fallen on natural gas prices. We were talking in the summer, Kailey, of 350 euros per megawatt hour. Now we're down at 114. And that is, of course, a long way from average prices before Russia's invasion of Ukraine. But still, much weaker today, down by 9.8% as European leaders agree on some of the path ahead.
Yeah, so not quite good, but definitely not as bad as it was. Things definitely are still not totally good in the UK. Political turmoil after, as Anna said, Liz Truss quit as UK Prime Minister after a very brief and chaotic tenure that saw her announce a massive package of tax cuts before unwinding most of it in the face of a market rout. Truss, who was 47, said she was resigning after just 44 days in office and is set to become the shortest-serving Prime Minister in British history.
I have a bold plan to grow the economy through tax cuts and reform.
It was becoming a distraction, so that's why we immediately changed that policy, and that's the kind of government we are.
We will keep an iron grip on the nation's finances. Mr. Speaker, I think the last thing we need is a general election. We need to act now to reassure the markets of our fiscal discipline. I have therefore decided to keep the increase in corporation tax that was planned by the previous government. I am a fighter and not a quitter. I recognise, though, given the situation, I cannot deliver the mandate on which I was elected by the Conservative Party. I have therefore spoken to His Majesty the King to notify him that I am resigning as leader of the Conservative Party.
So the UK could have a new Prime Minister as soon as Monday after Truss's resignation. Rishi Sunak and Penny Mordaunt are among the frontrunners in the race, and some MPs are calling for the return of Boris Johnson. Former UK Conservative Party leader Michael Howard spoke to us this morning and gave us his thoughts on Boris.
Boris Johnson has had his chance, and he blew it. He wasn't able to keep the confidence of Conservative members of Parliament. So I think that to go back to the psychodrama of the Johnson premiership would be a great mistake, and I hope people don't make that mistake.
Okay, so Anna, I'm just trying to wrap my head around all of this. We could potentially be talking about the return of Bojo. What does this process actually look like? How could we ultimately get to a new PM by Monday?
Yeah, we could get there by Monday if MPs manage to decide between themselves, Kailey. So there is a new process, a quicker process put in place to give us a new Prime Minister by latest Friday of next week. But it could come by Monday if MPs decide between themselves. And that happens by putting a maximum of 3 on the list that MPs will vote on Monday, get that down to 2. And then maybe the person who comes second, there'll be an indicative vote on the final 2 by MPs. And the person who comes second, there'll be a lot of pressure on that person to possibly stand down. So that's how we could get to an answer by Monday night. If that doesn't happen, it goes out to the members of the Conservative Party, the people who favoured Liz Truss last time around, and we'll see what they pick. But that's the idea, that we could get a vote by Monday, if not Friday.
Yeah, well, maybe you don't want to give them a vote again, considering what they did last time. It seems to me that if you're looking to do what's best for the country, Rishi Sunak makes sense, as he was right all along, and it took really his policies in a different way from a different man to set things straight in markets. On the other hand, if you're worried about the next election, the Conservatives are behind by, 30 points right now? So they have very little to lose in bringing back a popular, if controversial, figure like Boris Johnson, because, high risk, high reward.
Yeah, so just to go to those polls, the latest polls I saw just went out this morning. The Conservatives polling just 14% of the electorate, with the Labour Party on 53. That is the gap between the two of them in the latest one. Unprecedented territory, I'm told by political commentators on that front. In terms of who's in the running, both of the names you mentioned have their supporters, and both of them have their detractors. Boris Johnson, his supporters say he has a mandate. He won by that massive majority in 2019. His detractors, of course, point to the fact he's still under investigation by the Committee on Privileges in the House of Commons. That could come back to haunt him. And we know, in the words of Michael Howard, the former Tory leader, the psychodrama that went along with his leadership previously. Rishi Sunak, the former chancellor, his backers say, well, look at what a great crisis he has had. He absolutely saw this coming, and shouldn't we put someone in place who saw this coming? So a safe pair of hands might lead you in the direction of Rishi Sunak. But then those on the Boris Johnson camp really have an axe to grind with Rishi Sunak, because they blame him for bringing down Boris Johnson in the first place, and that's where we stand. But those two names very much to the fore. Also, Penny Mordaunt, who did pretty well in the previous campaign, also somebody to watch.
All right, so a lot of players in the game, Anna, and we'll see who wins, although they're going to have their own game to play after that. We're going to continue this conversation coming up, talk about how the political turmoil, the interest rate environment impacts real estate investment in the UK. Isabel Scamama, CEO of AXA IM Alternatives, will be joining us next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Sir Peter Westmacott, former UK ambassador to the US. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in Westminster, reporting on the political turmoil that has seized the UK. So let's now get a view on what that means for alternative investments, and specifically real estate. Joining us now is Isabel Scamama, Global Head of AXA Investment Managers Alt. She oversees 84 billion euros of an alternative business unit, which is the #1 real estate investment manager in Europe. Isabel, thank you so much for joining us. If we could just narrow our focus to the UK to start. Obviously, political turmoil with the resignation of Liz Truss, but that comes against a backdrop of higher interest rates that are likely going to move even higher due to inflation. How does all of that impact your world and the investments you're willing to make in the UK?
Good morning. So, when we talk about real estate or alternative, it's long-term view. We are investing over periods of more than 10 years generally. So what's happening in the politics or the volatility of the market, we have to look through the cycle and to look more long-term if we really want to deliver and to perform. Now, interest rate has, of course, some consequences. And the first one is that it forced all the market to reprice. We have seen that on the liquid markets, and we can expect that more will come in the course of 2023. Notably in alternative assets, so real estate, infrastructure. That's something we can have in mind. And of course, the more leveraged investors are, the more the impact, the tougher the impact will be.
Yes, and we can get to thinking about the impact of higher interest rates on real estate and infrastructure, Isabel. Just to linger on the UK for a moment, I've seen some reporting suggesting that some of the pension funds that got themselves in trouble around higher gilt yields were looking to offload other assets, including, in some cases, real estate. Are you seeing evidence of UK asset turmoil spreading into the real estate sector?
what we see is a denominator effect that is even tougher in the UK because of this sharp repricing in the UK. So yes, the long-term investors, and notably the UK pension funds are impacted. They have to rebalance their portfolio. They were also forced sellers of liquid assets just to cope with the margin calls. Having said that, real estate is generally a long-term play. You cannot get rid of your book within a week, within a month. So we don't see so much evidence of this. There is no forced sales in the market, but more a sort of, people putting everything on hold.
No, I mean, if we continue to see interest rates this high or higher, you'd have to imagine there will be more forced sales in the UK. Isabel, what does that mean for your business? I mean, during the financial crisis, you saw some big funds go out and make mass purchases, even of residential properties. Do you expect us to get there?
But we will. What is for sure, what is true, is that the market is a little bit dry for the moment. There is no evidence, no real forced seller, and no evidence that there is a real repricing. This will come because refinancing and investors that are leveraged will be forced to refinance at higher rates. So this will trigger forced sell, probably. Not coming from institutional investors, that will probably be more on hold, but we will see this coming in the course of 2023. Having said that, this will also create opportunities. We were expecting the market to reprice because, in bull market, everything tends to price the same. And we need to see a real differentiation, and some assets will have to reprice. Of course, to reflect the interest rate, but also to reflect the brand discount. This is something that is very important when talking about real estate. We will have to inject a lot of capex to make those assets green, to align them to a low carbon trajectory. So the repricing was a need if we want to have sufficient room to buy those assets and perform the appropriate capex investments to.
Just finally, can you get more specific about what those opportunities you are looking at are?
But if we talk about real estate infrastructure, we purchase several billions a year. But we were, if I look at real estate specifically, we have done a lot on alternative assets or developments because it was less crowded, and it was very challenging to buy existing assets because they were super expensive. So what we expect is to see more opportunities, notably in the UK market. If I look at the UK, for us, we are a little bit underweight, so we have room to increase our investments. We have been very active, developing 22 Bishopsgate, but there is still room. We have also been active in the residential market, purchasing recently Dolphin Square in London. So we have room in the UK, but also elsewhere to invest, and to invest this time more in existing assets that we can manage and restructure to align them with new ways of working, expectation of tenants, but also toward a more net zero trajectory.
Isabel, thanks so much for joining us. Isabel Scamama there. She is the CEO of AXA IM Alternatives. Let's turn back now to the U.S. equities drama that is Twitter. The stock falling as much as 13% in pre-market trading as the Biden administration is said to be discussing whether or not it should review some of Elon Musk's deals. This is the obvious one that comes to mind on national security concerns. For more, Alex Webb of Bloomberg Opinion joins us now. And I guess this was all kicked off, Alex, by Elon Musk's tweets. They seemed, to me, pragmatic, but to a lot of people very pro-Russia, and then threats to lift his funding of the Starlink satellite network that has so helped Ukraine in this war.
Yes, he tweeted a sort of proposal for how to end the war, frankly, and those included essentially ceding Crimea to Russia, then carrying out an independent poll in Lugansk and Donetsk, where they might have the opportunity to join Russia. And that is obviously massively against the view of the international community and, of course, US policy. So it posed the question, well, actually, do Elon Musk's interests align with US policy goals? And so, therefore, perhaps why I might have kicked off this investigation.
So, Alex, there's a question of how much fundamentals really matter for Twitter at this point, because this is essentially just a stock that purely trades on the probability of this deal going through. But on the fundamental story, Snap's earnings from yesterday don't paint a very good picture for any advertising-reliant business. How could that inform how this company ultimately is run if Elon Musk does indeed succeed in taking it over?
Or frankly, if he doesn't,
or that.
Reporting from the Washington Post is that Elon Musk is looking to cut as many as 75% of the 7,500 jobs at the company. But at the same time, Twitter itself is looking to, if the deal hadn't gone ahead or doesn't go ahead for some reason, perhaps to do with a regulatory investigation, it will also look to cut $800 million in costs, which, given its headcount, would represent sizable headcount cuts as well. So either way, it's looking, I would not like to be in the position of a Twitter employee right now, where your job future doesn't look terribly secure. The thing is, when you go to the Bay Area and you speak to people there, and I was there for a month in July, and loads of people say that Twitter employs too many people. Now, does it employ 75% too many people? I don't know. That's something we don't know the details of where it works inside. It was always inevitable that he was going to cut some jobs. This is a very big number.
OK, Alex, thanks so much. Bloomberg's Alex Webb with the latest on Twitter, the latest on the tech sector, of course, and Twitter shares very much under pressure before trading starts in New York. Turning back to the political turmoil in the UK, I'm very pleased to say joining us now is Margaret Beckett, Labour MP for Derby South and former, of course, UK Foreign Secretary, and somebody who's been serving on and off, but mostly on, in the House of Commons since the mid-70s. Margaret, very good to have you with us. Thank you for joining us. I know that the Labour Party has been calling for another election. All opposition parties seem to be calling for that. But it is constitutionally understood that it's OK to hand over power within the party during a parliament. And in fact, Labour did it back in the early 2000s. What is the best argument then that you can come up with for why we should have an election, given other parties have done this in the past?
Yes, it's happened before, usually on one occasion. In other words, one transfer, one new leader has taken over. Since July, we have now had 4 chancellors of the Exchequer, 3 Home Secretaries, and we're about to have our 3rd Prime Minister. I do think the precedent is not perhaps a good guide.
Are you expecting to see an election, though, knowing what you know about politicians and how the Tory majority is unlikely to vote for an election right now? Are you realistically expecting to see one?
In about a week's time, we shall get proposals for new boundaries for all of our precincts. And it may depend a little bit on what people see there, whether they think it's in their interest to have an election now or whether to wait until they could bring new boundaries in, which would be to the advantage of the governing party, and have an election then. And a lot depends on whether the Conservative Party, A, panics, or secondly, whether they can stomach it. Their MPs have had, under Boris Johnson particularly, have had days of being asked to go on the radio or television and hotly defend some very unpopular position, which is then changed within less than 24 hours. They feel angry, humiliated, and furious. Will they go on?
I wonder about how Brexit could change as a result of this. I mean, the Conservative Party was forced to do a real U-turn in terms of, old favorites, Reaganomics, Thatcherite policies, and now it seems like the concerns about Brexit are starting to flare up as well, the problems that's caused for the economy. Do you think we could see it turned around?
Well, Brexit has always been part of it, because one of the reasons why people favour one candidate more than another comes back to how they voted and what they did about Brexit. So that's an underlying current all the way through. As to, it's not easy. You may have noticed that my own party doesn't say that we can reverse Brexit, because if you try to reverse Brexit, there are a whole lot of exceptions that successive governments had negotiated over the years. As a new applicant, you would lose all of those. So you'd have to join the euro straight away, for example, unless they did a very, very special deal for the UK, which they may not be enthusiastic about doing at the moment.
Margaret, it's Kailey in New York. If we could just lean on your experience as Foreign Secretary and get the foreign perspective, what does leadership turnover like this in the UK mean for its credibility and, frankly, influence on the international stage?
We're a laughingstock everywhere in the world, which is a very depressing prospect for those of us who are used to the British being treated with a degree of respect and regarded as having experience and regarded as being a stable country. At the moment, the things in our governing party are the opposite of stable, and that's really quite depressing.
Yeah, things have not been so stable. Margaret, just finally, what lessons do you think the Labour Party, I know you're standing down at the next election, but what will the party learn from the turmoil that more borrowing and more and tax and the policies of Liz Truss brought about in the UK? What can Labour learn from that?
Well, obviously, no Labour government would have been allowed to cling on to power if we'd got ourselves into anything like this mess. But our press is so biased in favour of the governing party that, I mean, they actually, initially, some of the most fervent supporters of the present government actually applauded that mini budget that then promptly crashed the markets. So, you know, that's how far they are from reality. So there isn't a great deal we can learn except the importance of unity. The present government is now looking for a unity candidate, but because they all hate each other so much, they're having difficulty finding one.
Nice place to leave the conversation, Margaret. Thank you very much. Margaret Beckett, a Labour MP for Derby South and former UK Foreign Secretary, of course, for the Labour Party, giving us her thoughts on what's happening in the Conservative Party and in broader UK politics. The search for unity within the Tories carries on then over the weekend. That we'll see if they manage to come up with an answer by Monday. Coverage from Westminster continues shortly. This is Bloomberg.